how significant is this new stimulus package announced by the European Central Bank?
Yeah, it is a very, very big deal. It's called the Pandemic Emergency Purchase Program, and what we're talking about here is 750 billion euros worth stimulus that the European Central Bank is essentially committing to purchase through both private sector bonds and also the public sector. And the idea here is to provide some stability to markets that have had a lack of it, and also to provide some confidence to governments too, and to support governments that have been hardest hit from the crisis. Countries like Italy, countries like Spain, increasingly France, where we've seen the cost of borrowing increase as these countries are forced to adopt measures to adjust to the virus and adjust to the crisis. And so we've seen, despite some slight losses here on the markets, overall we've seen the cost of borrowing decrease since this package was announced. Again, a significant amount of money, 750 billion euros from Christine Lagarde, coming after some criticism that the ECB wasn't as aggressive enough or wasn't being as aggressive as the Federal Reserve in the United States. This is designed to really change that. And Christine Lagarde, also just to hammer home this point, she put out a tweet saying there are, quote, no limits to our commitment to the euro. You might hear an echo there of what Mario Draghi, her predecessor, said at the ECB, referring to the Eurozone, referring to saving the euro, ready to do whatever it takes, was the famous quote from Mario Draghi. Christine Lagarde trying to send a similar message today to the Eurozone.
Meanwhile, Cole, then, in the United States, plans are underway there to provide relief to workers and to businesses. Tell us a little bit about it.
So President Trump last night, Wednesday night in the United States, signed a plan, which is one part of the U.S. plan, which is really designed to provide sick leave, designed to expand unemployment insurance for the states that are then sending out that aid, really designed to protect workers. And the big piece that was paid sick leave to those affected by the coronavirus, 10 days, up to 10 days. With some controversy there that the plan is not, that the plan includes exemptions and exempts large companies from that. Nevertheless, that was one big piece of the U.S. plan, and the attention now is turning towards the much bigger plan. That first plan I mentioned towards workers, including sick leave, is expected to be around over $100 billion. This next one that Congress is working on right now and being encouraged to do so by the president, expected to be around $1 trillion. So really dwarfing anything we saw in the financial crisis, the last financial crisis, 2008, 2009. A lot of money on the table. There are two parts of this package. One, around $500 million going to be going towards American taxpayers individually. So one idea we've seen floated is literally just sending Americans checks that they could then use to stimulate the economy. That's the one part of it. The other piece of it is going to be going towards businesses. And this is where it gets a little tricky, because if you remember back in the financial crisis, there's still a lot of frustration and concern about the way that those bailouts to the banks occurred without any strings attached. So there's going to be a lot of scrutiny now over if the money goes out to these businesses, what kind of conditions will be attached? Is it going to be a loan? Is it going to be a direct bailout? And we've seen some senators expressing skepticism about just handing over $500 billion without some strings attached. At the same time, there is going to be a lot of pressure to get some kind of package passed. Just to give you one really shocking figure, yesterday, JP Morgan estimating more than 10% drop in U.S. GDP this quarter. So really going to be a lot of pressure on U.S. policymakers to deliver some response here to an economy that's really struggling, or potentially going to be struggling even more.